XRP is dropping right now. Not because of bad Ripple news, not because of some SEC headline. The real reason is happening thousands of miles away in the Middle East, and almost nobody explaining crypto price action today is connecting these dots properly. By the end of this video, you're going to understand something most crypto channels won't even mention: how a conflict between two countries can move the price of your XRP even when nothing about XRP itself has changed. Let's get into it. What's up, everyone? Welcome back to the channel. If you checked your portfolio today and saw red, you're probably wondering what happened. Ripple didn't announce anything bad. There's no new lawsuit, no exchange hack. So why is XRP sliding? Today, I'm going to walk you through the actual chain of events causing this, starting with something that has nothing to do with crypto at all, and showing you exactly how it trickles down into your XRP price. Stick around, because understanding this pattern is going to make you a much smarter holder going forward. Let's start with the numbers. XRP is trading around $1.08 right now, down about 1% over the last 24 hours. That might not sound dramatic on its own, but it's part of a bigger pattern. Price has been stuck moving sideways between roughly $1.05 and $1.10 for over a week now. Buyers keep defending that lower zone, but they haven't had the strength to push through resistance around 110 to 112. It's a market that feels heavy, like it wants to fall, but keeps finding just enough support to avoid a real breakdown. Now here's the important part. This isn't unique to XRP. The entire crypto market dropped today, pulling total market value down to around $2.2 trillion. So whatever is happening, it's bigger than just one coin. Let's talk about what that actually is.
Here's the part almost nobody is properly explaining. Tensions between the United States and Iran have been escalating, and that has pushed oil prices above $90 a barrel. Now, you might be thinking, what does oil have to do with XRP? Stay with me, because this is actually a really important lesson in how modern markets work. When oil prices spike because of geopolitical conflict, it signals to big investors around the world that risk is rising. Wars and conflicts create uncertainty, and uncertainty makes large institutional investors nervous. And when big money gets nervous, they don't sit around and hope things get better. They move their capital into what are called safe haven assets. Think gold, US Treasury bonds, and cash. Crypto, including XRP, sits on the completely opposite end of that spectrum. It's considered what's called a risk asset, something investors buy when they're feeling confident and want to chase growth, and something they sell first when they're feeling scared and want safety. So when a conflict escalates and oil spikes, it's often one of the very first signals that triggers the shift from risk-taking to risk-avoiding across global markets, and crypto usually feels it fast. There's a second piece to this puzzle, and it's the US dollar. During periods of global tension, the dollar often strengthens because it's still viewed as the world's primary safe haven currency. Here's the simple relationship to remember. When the dollar gets stronger, crypto assets priced in dollars, including XRP, tend to get pushed lower. It's almost like a seesaw. Dollar goes up, risk assets like XRP tend to come under pressure. Dollar weakens, risk assets often get more breathing room to rise. So right now, we've got rising oil prices from Middle East tension, plus a strengthening dollar from that same tension, both pushing in the same direction, and XRP, along with basically the entire crypto market, is caught in the middle of that pressure.
Now, on top of the macro pressure, there's a second layer happening, specifically in the XRP and crypto regulatory world. Some firms, including Bitwise and Canary Capital, filed for XRP spot ETFs. And when those filings first came out, they gave the market a nice boost of optimism. But now, more people are realizing that Ripple's ongoing situation with the SEC creates real uncertainty around whether these ETFs actually get approved or end up delayed indefinitely. This creates what traders call a sell the news risk. That's when good news comes out, people buy in anticipation, price rises a bit, and then when the actual approval doesn't come as quickly as hoped, some of those buyers get impatient and sell, creating downward pressure even though nothing bad technically happened. Add to that the Clarity Act,
which is a piece of crypto regulation working its way through the US government. There's growing concern that this legislation could face delays stretching all the way out toward 2030. That kind of long regulatory uncertainty makes big institutions cautious about jumping in aggressively right now, because nobody likes deploying serious capital into a legal gray area. Let's bring in the technical side for a moment, because the charts are telling an interesting story too. The Relative Strength Index, or RSI, is sitting at around 44 right now, which is on the bearish side of neutral, meaning momentum is leaning slightly negative, but we're not in extreme oversold territory yet. Derivatives markets are also showing increased hedging and deleveraging activity, which basically means traders are reducing risk and protecting themselves rather than making aggressive new bets. That usually happens during exactly this kind of uncertain, cautious period. None of this is catastrophic. It's a market that's playing defense right now, waiting to see how the geopolitical situation develops before committing to a clear direction.
Here's something worth understanding for the long run. This isn't the first time global conflict has rattled crypto markets, and it almost certainly won't be the last. Historically, when major geopolitical shocks hit, whether that's regional conflicts, sudden oil spikes, or unexpected diplomatic breakdowns, crypto tends to see a sharp, fast reaction in the first few days, as risk gets pulled off the table. But historically, once markets get more clarity on how a situation is actually going to unfold, capital often starts flowing back into risk assets again, sometimes fairly quickly. That doesn't mean it will play out identically this time. Every situation is different, and geopolitical conflicts can escalate or de-escalate unpredictably. But understanding this pattern helps explain why a headline about Iran and oil prices can move your XRP holdings, even though it has absolutely nothing to do with Ripple, XRP Ledger, or anything happening inside the crypto industry itself. So let's zoom out. XRP holding the $1 to $1.10 zone despite all this macro pressure is actually worth noting. The fundamentals, things like Ripple's regulatory progress in Europe, ongoing ETF filing activity, and network development, haven't disappeared. They're just being temporarily overshadowed by a much bigger, unrelated global story. The key levels to watch going forward are simple. If XRP loses the $1 to $1.05 support zone, that opens the door to more downside pressure. But if it holds here while the geopolitical situation stabilizes, there's a real case for buyers to step back in once that risk-off pressure eases. So here's the bottom line. XRP isn't dropping because something is broken. It's getting pulled down by a much bigger wave. Rising oil prices from Middle East tensions, a strengthening dollar, sell the news pressure around ETF filings, and lingering uncertainty from delayed crypto legislation. All of that is happening at the same time, and XRP is simply caught in the current. Understanding this doesn't mean you ignore price action. It means you understand it better than most people scrolling through panic headlines today. I'm not a financial advisor, and this isn't financial advice. Always do your own research before making any decisions. If breaking down these connections between global events and crypto price action is useful to you, hit subscribe and turn on notifications, because this Iran situation is still developing, and I'll be tracking exactly how it affects XRP and the broader market. Let me know in the comments, were you aware oil prices could move your crypto portfolio before today? Let's talk about it down below. See you in the next one.